Back to the ETF Inspector. It's Saturday, July 26th, a little after 5 in the evening. Sorry this video's a little late. We were at a swim championships a couple hours away from home, actually making this video on the drive home, so if you hear some funny noises or my family in the background laugh at the dad joke, you'll know why. So this is the video covering YieldMax individual income funds. They pay out monthly, so we cover them weekly. Amazon is one of them, AMZY, right? Overall, we cover AMDY for Advanced Micro Devices, AMZY for Amazon, APLY for Apple, FBY for Meta, or what used to be Facebook, GOOY for Alphabet's company Google, MSFO for Microsoft, and NFLY for Netflix. Just a reminder, I'm also on X at ETF_Inspector1. I'd let you know when videos are coming out, different pertinent information to the funds, and I also call out people for big thank yous. Oops, I didn't mean to click on that, but thanking people that have recently donated to the channel. That's much appreciated. All right, let's take a look. We will start with the Group C's that we did last week to see how they paid out, because yesterday was your payday. We said that they earned $2.02 per share in the last 4-week cycle, but the IV only said that they would pay out around 33 cents. I guessed way high. I said $1, kind of went in between, but they paid out 56 cents. So not sure if you were happy with that or not. It was an 86% annual yield, so maybe I should have looked at those kind of percentages before making my guess. So was a little off on that one. A little. As far as the fund is concerned, though, trades for this week. So this is the first week of the new 4-week cycle. They had to close out their 162.50s, paying a pretty penny for them, $3.50 to $4 a share, and they sold the new rolls out, had to roll out a week and up to 172.50 and 170, collecting 237 and 169. It resulted in a $2.6 million trading loss for the week. They've got their synthetic here. It's a September 19th 155. The stock is currently at 166, so their new synthetic already has $14 million in value, or roughly 66 cents per share. There was an increase of 1.3 million outstanding shares over this past week, bringing them up over 22 million outstanding shares. 189 million being managed in the fund, or assets under management, and that brings their NAV and their share price even with each other. For the new week coming up, they have calls sold at 170 and 172.50. They are currently 2.1 and 3.6% out of the money. So AMD has about $3.50 worth of increase before it is capped by the sold calls that we have here. They've also purchased calls, basically a $7.50 spread on each of them as their protection. That's the most that they could have to pay in between them before both go up dollar for dollar together. All right. Next, we will go to MSFO. They're another Group C, also paid this past week. We said that they received $1.96 per share in profits from income that they could have distributed, but based on the IV, it would have only been 34 cents. My guess was 55 cents. I was a little closer, but still pretty far off. 41.39 cents is what you got paid out. 30% annual yield, so they are still paying above the 30-day IV, but this one was kind of a disappointment based on how much they made. This little minus sign just means from last week, the IV decreased. That's implied volatility. I did forget to mention that. Same here. AMD's is much higher, 48.2, but it was a decrease week over week. When we go to their trades, they traded on 3 different days this week. First closing out their 520s. This looks like it was just a forced, maybe people took money out, so they just had to buy to close their sold calls and sell to close the long calls. So that was inconsequential, $6,500 loss. On Thursday, they had some trades closing out their 517.50s for 16 cents and selling the new 525s for next week. So they got to roll up and out and make a profit, selling them for $4.65 a share. And then also looks like they put these back to work, so maybe the new money came right back in the next day. So selling some more 525s. $695,000 credit on the trading day. And then on Friday they finished out their roll, closing out their 515s, selling them as 525s for next week, paying 27 cents, collecting $5.19, and then just had a little bit more. Oh, this is part of the synthetic, right? So they added 70 contracts to the synthetic based off of money coming in. So they sold puts and bought calls at the same strike for September 19th, 70 contracts. So that ended up being a negative as far as trading wise, but the synthetic lasts till September 13th. $79,000 credit on the day, and that's all. This is the first trading week of the new cycle, like we said, for Group C. Microsoft synthetic is at 500. The stock itself is currently at 513, so the new synthetic does have value. It's about 2.67% in the money, so it's worth almost $4 million. There was new outstanding shares of 400,000 this past week, bringing them up to 7,650,000. 136 million assets under management. The NAV and the share price at close on Friday are within 1 cent of each other. They've got calls sold next week, most of them 2,600 contracts at 525. They're 2.2% out of the money, and then they just have that small portion, those extra 70 at 532.50. They're 3.6% out of the money. So with 525 being the sold strike, they've got about $11 and change worth of upward movement that Microsoft can go before they are capped. All right, the last Group C, again, paid this week. And I do own shares in AMZY, APLY, and NFLY. So this is one that I have. But I'm not paid to make these or anything. I just make the videos. So they declared 43.5 cent distribution. When we looked at the numbers, they made $1.69 in income. Their IV would have had them paying out 36 cents per share. So taking that information, I made my guess at 50. It was 43.50, so I was off by about 6.5 cents. We'll look at the trades. Again, first trading week of the new 4-week cycle, and it looks like they had a good week. On Wednesday, we got some buy and a close for 46 cents, 65 cents, 51 cents, and 52 cents, and selling the new calls at collecting $11.50 and $11.50. So an overall profit of $485,000 on the day. Thursday, some more of the same, rolling to the following week. Or actually, this is just sales. So selling new at, what's that, $12.0250, collecting $10.29, collecting $117 for selling the 12, or this is, there we go. This is the synthetic. Usually they don't have it mixed in the middle there. So buying more calls, selling more puts. So at that point, adding to the synthetic is what brought in a lot of the value there, because the stock price has dropped. So selling these puts basically in the money is going to bring in a lot of money, but they will have to be paid for to close out. And then just selling some more at $11.85, calls, 80 contracts. Overall, $1 million credit on the day. And then finally on Friday, just selling a little more, 1202.50s, 240 contracts, buying the protective call at 1232.50, so a $30 spread, $135,000 credit on the trading day. They've got 173 million assets under management. 1280 for September 19th is what the synthetic is. The stock has dropped to 1180, so it's $100 underwater. That means it's going to cost $13 million to close it out. But we've got time. We're not closing it out anytime soon. September 19th is when it expires. There was an increase, 700,000 to the outstanding shares, bringing it up to 10,275,000. The NAV is actually a few cents below the closing price, so people were paying a little extra, more than it was worth on Friday. They've got a handful of sold strike prices, right? 1185, 1200, 1202.50, and 1205. But they're still pretty tight, big picture. 0.3%, 1.6%, 1.8%, and 2% out of the money. So realistically, there's only $5 on an almost $1,200 stock before we hit the cap on the first 80 contracts. The majority is in that 1200 to 1202 range. We've got $20 till we get to that point. All right, so that's what just got paid this past week. Now we've got this week. We'll start with AMZY. Look at the trades first. On this week, the only trading day was Thursday, closing out their 227.50s, two different spots, paying $5.59 and $3.62 to close them, and selling 245s and 240s for next week, collecting a little less than when you factor in having to buy the protective calls. They lost 1.4 million trading on the day, but overall for the 4-week cycle, especially with closing out their synthetic back on July 10th, they brought in $44.4 million. So if we take that and divide it by the outstanding shares, that's roughly $2.41 per share. No, they're not going to pay anywhere near that, because the IV, this is their promise price, is 42 cents. That's your 30-day IV multiplied by your share price divided by 13. So this is what we can expect as the low. But since they made such a good bit over that, I got to guess at 63 cents. So I'm done falling for the real high ones, just because they haven't even been coming close. Last time they paid 59 cents. That was a 46% annual yield. They made decent money. I'm putting it up over 63. That should be a little over 50%. But we'll find out on Wednesday. Declaration date is on July 30th, and you will get paid on August 1st. You'll need to own the shares. You'll need to buy them by July 30th. If you wait till July 31st, you will not be eligible for the distribution. There's 303 million assets under management, increase of 225,000 shares this past week, bringing it up to 18.4 million. The NAV and the closing price on the fund were within a penny of each other. They've got a synthetic for September 19th at 220. The stock's at 231, so that has 16.8 million in synthetic value, which equates to about 92 cents a share. They've selected 240 and 245 as the strike prices for this coming week's calls. They are 3.7 and 5.8% out of the money. They do have, Amazon does have earnings on July 30th, so it does have potential to make a big move. We will see how that works out. So that's it. We will find out together on Wednesday. I post things on X as soon as YieldMax puts their results out. I repost them just in case you missed that posting. So that's it for AMZY. Next is APLY for Apple. Start with the trades. Only traded on one day this past week. That was Friday. Start off by closing out the 215s for the week, paying 9 cents a share. More 215s paying 15 cents, and more 215s paying 26 cents. And then selling 220s, 220s, and 222.50s for $1.50, $2.19, and $2.25, making it a $974,000 profitable day. If we take the entire 4-week cycle, resulted in a trading surplus of $876,000. We take that $876,000 and divide it by the 10.575 million outstanding shares. That only comes to 8.28 cents. They're not going to pay that low. The IV, which did decrease this past week, would dictate a 28.13 cent distribution. I originally put my guess as 27. Maybe I'll go 27.50. I want to say 28, but I don't know. All right, we'll find out on Wednesday, July 30th. That's 4 days from now. APLY's synthetic in Apple is a 200 for August 15th. The stock is currently at 213.88, so that has $9+ million in synthetic value, or roughly 89 cents per share. Their calls sold for this week, like we just talked about, are 220 and 222.50. Those are 2.8 and 4% out of the money. So Apple can go up a little over $6 per share before we are capped with our sold calls. And again, Apple also has earnings this coming Wednesday, so that is potential for the stock to make a bigger move than usual. But at the same time, that also brings in higher premiums selling across that earnings date. Okay, that's it for this past week's dividend payers and this coming week's distribution guesstimates. So then we just have a couple stocks left here in the middle that aren't affected in either way. We start with Group B, FBY for Meta. They had trades on Wednesday and Friday. Wednesday was closing out selling more of the synthetic and then selling calls to go with it. Profit of $47,000 on Wednesday, and then Friday the roll to the following week, closing out the 730s for 2 cents, the 720s for 74 cents, and the 715s for 439. That one hurt a little. And then selling for next week 750s, 745s, and more 745s, collecting 11, and 9, almost $10, resulted in a $1.1 million profit on the trading day. FBY's next declaration is still 18 days away, so we're not worried about that yet. 30-day IV of the fund dropped to 35%. They have a synthetic at $7.25, expiring September 19th. Stock is currently at $712.68, so it's a little underwater. It will cost $2 million as of right now to close it out. There's 182 million assets under management within the fund, an increase of 200,000 shares over the past week, bringing outstanding shares up to 11.2 million. And if you purchased FBY at close on Friday, you actually got a 2-cent discount from what the NAV determines it to be worth. Their calls for this Friday are at 7:45 and 7:50. They're currently 4.5 and 5.2% out of the money. They have already had their earnings, so don't generally expect a 4 to 5% in a week. So looking good to start the week with those strike prices, but we will see. Next is GOOY for Google. Trades this week on Tuesday, Thursday, and Friday. Looks like they had to close out a portion of the synthetic 400 contracts on Tuesday and then close out the sold calls that went along with them. With that resulted in a $330,000 surplus. Then the next Thursday, they actually added to the synthetic by 100 contracts and sold new calls to go with them. That resulted in a $133,000 loss. And then finally on Friday, closing out and rolling, paying 6 cents and $1.62 to close out their 192.50s and 195s, and sold 197s and 197.50s both times, collecting $1.26 and $1.53, resulting in a $101,000 profit. GOOY is part of Group A. Their next declaration is 11 days from now on August 6th. Their 30-day IV of the fund dropped this past week to 26.7. There's 139 million assets under management. There was a decrease of 200,000 shares this past week, bringing it down to 10,775,000. The NAV and the closing price are equal. Google announces earnings on Tuesday, so that has potential to make large moves in the stock. Our synthetic is a September 19th 180 with the stock at 193. That has $13 of value. Roughly 10 million is what we would collect if we closed it out, and that results in a 96-cent per share profit. Calls sold for the week, the majority of them at 197.50, are 2.2% out of the money, with a smaller 100 contracts at 200. They're 3.5% out of the money. We've only got about $4 and change worth of upside that Google can move before we are capped with our 7,000 sold calls. And finally, maybe not finally. That's it. Not finally. That's all of them. So, all right. Sorry if this is a noisy background. Riding in the vehicle on the way home. So I got a dad joke of the day for you. Before I do, just want to thank you for watching. Thank you for all the likes, comments, shares, feedback, even the criticism. I appreciate it, helping me get better. So, dad joke of the day. Why did the invisible man turn down the job offer? He just couldn't see himself doing it. She laughs at everything. All right, that's it. Have a good rest of your Saturday, and be on the lookout Sunday for my ALTI and LFGY week look ahead and payment distribution guesstimate. Always seems to be a big hit. Also, if you are interested in my personal trades from the last week, that video has already been put out. And that's about all I got for you. Thank you. Have a good weekend.